Good morning, everyone. Tommy Grisafi and my business partner, Dave Lechtenberg. Dave Lechtenberg is in beautiful. Where you at, kid?
West Union, Iowa, Northeast Iowa.
How long you worked at Advanced Trading for our new clients?
About a little over 17 years now.
Before that?
Was with Country Elevator, traded with Advanced Trading or Merchandise Grain with Advanced Trading's help. Did that for 15 years prior to that.
So you know what you're doing. You're qualified to have a conversation about
No,
corn.
I've just
Well,
stuck around for a long time. That's all that means.
very good. Let's have some fun. We got a great group of people. We're going to send this out to advanced clients, friends of advanced clients, new clients, old clients. Most of you are out in the field. If you're not out in the field, you're probably broke down at the parts store or you're getting ready to spray or something. We got clients all over the country. We clients in the state of New York, Iowa, Illinois, Indiana, North Dakota, South Dakota, Wisconsin. You guys are all over there, but just a little update from up north. The good folks of North Dakota will be planting like crazy. They got a little rain on the way, but this whole North Dakota is going to go PP. You can cancel that. It's been 85 degrees in Carrington, North Dakota the last it's been warmer in central North Dakota than it's been in Florida. Keep that in mind. So that's just interesting how things straighten themselves out. We didn't think the snow would melt till June 1st. They're going to be done planting by June 1st. So keep that in mind when we talk about markets. Dave, let's talk about corn. Looking at the board right now, July corn, I got to look at a different mouse. July corn's up 592. And then we have Sep corn, 517, Dees corn, 521. Let's talk about corn. Let's go all the way back to old crop, 2022 bushels. Then we'll talk about 23. I do want to talk that I'm a little worried about this budget deal getting done. And should we, if people are super nervous over the weekend, the next few weeks, should we be doing maybe a July short dated? I bought a bunch of SEP short dateds for a client yesterday. Then we're even going to go out to 24 corn. I know you been writing notes like a little squirrel over there. You got little post-it notes all over your laptop. What do you want to talk about when it comes to 22 corn? If someone's holding 22 corn, floor is yours.
Well, if a guy is sitting on 22 corn for various reasons right now, if I'm talking to the guys and they give me a reason, if I ask them why haven't you sold it? Well, they're going to talk about how the board has dropped. It's got to have a bounce back. How China's been a huge canceler of their sales. They're surely going to become a buyer again. It's dry. We're at the beginning of drought. There's all kinds of stuff, and I'm sure Tommy could give you another 20 or 30 more things reasons why corn can go up or why it
Can
could
I
go
add one real
down.
quick to you to
Sure, you
compliment
bet.
you? The funds went from really long to short.
Yep. Yep, exactly. That's the thing. So there's an abundance of reasons out there. Nobody knows for sure at the end of the day, are we going higher, are we going lower? But the one thing that we do know when it comes to the old crop corn is that right now that end user is willing to pay a lot more for corn that you'll bring him today than they're willing to pay you in the futures. If you just look at the futures, and Tommy touched on this and showed that July futures in comparison to September, there's about an 70 cents close to it. Inverse, July is trading 70 cents higher than the September. And then you look at basis. And here in Iowa, for an example, it depends when you start in the east and go to the west, the basis gets better, but basis in eastern Iowa is plus 50 and you get to plus 80 out into the July. So you put these together and it's basically breaking down to that if you're not willing to sell grain today, the value of that grain in your bin is about $1.40, $1.50, depending where your basis is, more today than it is in the future. So here's your reality. You can own number 2 yellow corn in your bin at a value of $6.50, give or take a little bit there. Or you can own number 2 yellow corn on September futures at a value of $5.10. So if we're talking about, what makes more sense, why do I want to own something that I have to pay $6.50 for when I can pay $5.10 for the exact same number 2 yellow product? So bottom line, if you don't like the prices today, if you've got corn in your bins because you're hoping maybe that it's going to go higher, at least own that grain in the same time frame that you plan on trading it. Because if you're not going to sell this grain by the end of June, the end user is going to switch their bids to September. So if you're in that mindset that I'm not selling today, in reality, you're trading versus the September futures. So let's own that grain in the same time frame that we plan to trade it. Let's own it at 510 as opposed to owning it at the current value in your bin at 650. And if you don't like futures, if you don't like the downside risk, you don't want to make margin calls, you can use a September call and accomplish the same thing. You can go out and buy a September 540 call for about 20 cents, excuse me. So you can now own that same corn at 560 as opposed to $6.50 nearby. So it's still a lot better. The call gives you don't have that downside risk, you don't have a margin call issue. So bottom line, don't own physical grain in a market that's inverted like what we're seeing today. Turn her back to you there, Tommy.
Well, it kind of reminds me, and everyone who watches the shows, all the ag shows, they keep talking about how this is correlating with 13. And one of the most painful things I had watched farmers do in 13 is turn really high priced old crop into moderately okay priced new crop. And I don't know who told the farmer that we had to go into a 4-year bull market, but I don't think it's ever happened. Strangely enough, it still can't. So I'm not sitting here to give you the speech that the market can't go up. I'm just
Right.
saying that there's a lot of things weighing on keeping the market down. The reality that there is old crop out there, Brazil has a big crop coming in, could still have a few problems finishing up, but it's a lot bigger than people had thought. And all the fringe acres that we the market, the I-State guys were hoping North Dakota wouldn't get planted. North Dakota's hoping they get planted. Now the North Dakota guys are going to be shocked corn went down when they were the very 3-4 million extra acres that made it go down. Um, High prices are fun to trade. They're in some ways easy. We're going to have to start talking a lot more about higher interest rates. And I don't know if you know the numbers off your head, and I hate to pop one on you, but it costs a lot more to carry grain per month,
Yeah,
correct?
exactly. And that's the thing we didn't even touch on is that grain in your bin at 650, valued at 650, you can turn that into cash. And even if you're just using CD interest rates of 4 or 5%, you're talking 2.5 to 3 cents a month just in the interest carrying cost of holding that grain. So you can add that to the $1.40, $1.50 inverse that we're talking about. So it just, there's just a ton of reasons not to have grain ownership in that bin.
Yeah, and there's probably going to be more of that. So we'd like folks to, and this is a reality. I mean, we haven't had an interest rate like this for 15 years, for many of you, 30 years. And a lot of you weren't farming 15 years, and you sure as heck weren't farming with this cost of production 15 years ago. Um, what else do we have here? So that's 22 crop. What would we like to do in the 23? Where do you see most of your people right now in 23 crop?
Well, 23, if you haven't managed price risk at this point, thank goodness for crop insurance. The people that we have that have managed it and we have puts on at some level 550-ish type numbers, we're looking at if this market wants to do what it always does, when it goes up, it goes higher than it should, and when it goes down, it goes lower than it should. If we're in that going lower than it should stand right now. Well, let's pull some money out of that as the market allows us, as it gives us some good return. Hopefully, at some point, they realize that they overdid it to the downside. And if we can pull out 75% of a move down, all we need for a move back up to be as good or better is something more than 25% of a recovery. So we're not looking for, when we roll things down, we're not looking for the market to come back to where it was. We just need it to come back some of where it was, and we're going to be better off than not managing it at all.
Yeah, as far as 24, I know a few months ago we got a lot of 24 puts on for people. We
Hmm.
did some aggressive stuff where we bought 550, sold 650 calls. That is a marginable position that you will have to send a chunk of change in as the market goes up. But I don't think we have a single client right now who wouldn't mind getting caught short at 650 next year when they don't have crop insurance in 24. So my thinking, you're thinking, Ryan Fogel's thinking, I'm thinking that was loud. Our overall thought was hey, you don't have crop insurance. You got your 591, but you don't have crop insurance for 24. If you're really thinking this market can go down, these are some things you could do. And some clients did some very, very aggressive things for 24. Now I think it'd be obvious, yeah, of course, I should have done more for 24. So here's what we're looking at, short and sweet. If you have 22 crop, you think we're crazy for talking about 24 crop. But if you had your 22 sold, ownership calls, moving on to 23, partially sold, protected pretty well with a form of a put, a traditional D's put, a short dated put, fine. Then if you had 24, your Memorial weekend, the first beer or cold beverage you pop is going to taste a lot better than the 10th, and you won't be crying in your beer. Or you don't even have to drink. You could just drink bubbly water. That's fine. But the amount of money that was lost by billions of bushels of grain that's grown by American farmers that wasn't pre-sold, pre-hedged, pre-protected is tens and tens and tens of billions. Just take a 15 billion bushel corn crop and take $1 off it for multiple years. Now, let's go back. You all did very well by holding grain. The very thing we're talking about that store and ignore is not going to work made you a small fortune the last few years. I get it. So you may say, well, I didn't sell this year, but a few years ago I owned a couple 100,000 extra bushels of corn and made $2 on it. We get it. But moving forward, Dave, you can start talking. I'm going to read the structure of the corn market moving forward. Let me just start with D's 23. D's 23 corn is 520. D's 24 corn is 505. D's 26 corn, this is where we get scary, folks. D's 25 corn, 475. D's 26 corn, and we do trade that here, not very much, 467. So as we go out the curve in corn, we're going to a 450 futures market, which would pretty much put you at a $4 cash market if we start to go to uh, a lower traditional cash market. That would put Central Illinois and center of Iowa at maybe minus 20, minus 30 at harvest. What's the worst? You're in Northeast Iowa. What's the worst, Mr. Lechtenberg? What's the worst corn basis you've ever seen in your life? Another pop-up question. You didn't know there's going to be a
Oh,
test.
well, there's been various ones. You take,
And hold on, a follow-up to that.
okay.
What caused that poor basis?
Well, and I can't tell you the year for sure, but when we had the damage in the Gulf from the hurricane right during harvest, that was probably one of the worst bases. To some extent, it's pretty hard to say what the worst basis was because at times, you go to no bid, and no bid
Hmm.
is basically, that's a it's a basis that whatever the value of the grain is so they can't sell it. So yeah, you can see a market depending on whether the end user needs it or not. When he gets to the point where he not only doesn't need it but can't use it, you can go to no bid at all. So basis is it can be vicious at times.
Hmm. I think in my career, I watched soybean futures break to my latter career. I've been at the Chicago Board of Trade as a member since 1993. I've traded a ton of $1.99 and 210 corn. I'm old enough to trade LDPs and stuff like that. But when we started fighting with China, I remember when the basis went from a dollar under to $1.25, and I was told by an elevator, we're going to $1.75 under on Monday. And I've seen lower $8 futures with $1.75 under basis.
You know,
And that's very painful.
yeah,
Real
it
quick
is.
lesson. I'm not negative on corn. I'm not positive on corn. We're 520. I think a Board of Trade futures worth 520. I'm not going to argue the price. It was 491 a few weeks ago. It was 575 a month before that. I will tell you this. Do yourself a favor, go to barchart.com, look at a hog chart, look at June hogs, August hogs, look at the structure of the hog market. I promise you, I'm not proud to say this or happy to say it, but over the next few weeks and months, you're going to see an incredible amount of people go broke in the hog industry. That very industry had prices in the hundreds for years, and that's changed. Right now, the cattle market is every day messing or trading around new highs, all-time highs. We have incredible price structure in live cattle and fat cattle. That too will change. And with an election coming up, this administration or any administration who's running for reelection wants to deliver this great message that we help get food prices down. I watch 6, 9 months from now, a year from now, remember this message. Watch the President of the United States say that he and his team helped lower inflation, which is more money in your pocket. 99% of the world's not, 99% of America is not farming. They're not talking to you. They're talking to the other 99%. So I want you to be defensive. I want you to be optimistic. I, I'm very interested to see what happens when folks store grain in October, November, December and realize that they're paying 9% operating. If that grain very much goes sideways to down, it's going to become painful. You finish it up, Dave. How do people get a hold of us? And we're going to do soybeans tomorrow, aren't we?
Yep, yep. No, get a hold of us. Our numbers are real similar. Tommy's number is 800-664-4383. My number in my office just ends in 4373. They ring both. You know, you dial either place, it's going to ring at either one of us. And so if one of us is busy, the other will answer, you know, and call, you know, go into a lot more. There's a lot more in-depth explanations as far as why to hold corn, why not to. You know, call, talk it over. That's what we're here for.
Sounds good. Everyone, I'm really worried about this debt ceiling, but a lot of things we worry about in life don't usually happen. But just know it's out there. Want to get it out there. Everyone, thanks for being a client. We appreciate your business. Tommy Grisafi, Valparaiso, Indiana, Dave Lechtenberg, West Union, Iowa, our other partner, Ryan Fogels, traveling today, and we'll talk to you real soon. Thanks, everyone.